Good morning, and a happy Wednesday. Welcome to today's episode of Morning Wealth. Three things that we will talk about. First, Apple, and now Tesla is splitting shares, Airbnb's IPO plans, and record junk bond sales in the US. The S&P 500 snapped a 7-day winning streak as investors worried about the prospects of broad coronavirus relief package. The index opened modestly higher and flirted with record levels for most of the session before pulling back in the final hour of trading. It was down 0.8% on the S&P. S&P 500 is just 1.5% off February's high. The Dow also was lower, was down about 0.4%, while the tech-heavy Nasdaq Composite slid for the third day in a row, was down about 1.7%. Shares of companies that are particularly sensitive to the direction of the US economy, such as banks, energy firms, cruise operators, and airlines, had all helped pull the index higher for much of the session. However, broadly turned lower on reports that lawmakers remained at an impasse over the economic aid following President Trump's executive actions on jobless benefits and other reliefs over the weekend. Earlier in the session, investor sentiment had been buoyed by Mr. Trump, who had said late Monday that he was considering a cut in the capital gains tax and paring taxes for middle-income families. A recent surge in coronavirus cases also continued to show signs of abating, with the US reporting fewer than 50,000 new cases for the second day in a row on Monday. So analysts attributed a recent uptick in stocks in beaten down sectors partly to the decline in coronavirus cases as well as a run of better than expected economic data in terms of jobs. The price of gold fell 4.5% to 1932, its biggest one-day percentage decline since March. In the meantime, the yield on the 10-year US Treasury note also rose very sharply to 0.657 from 0.57 on Monday, marking the largest increase since June. In other market news, Europe stock 600 jumped 1.7%. Hong Kong's Hang Seng snapped three days of losses to rise 2.1%. The increase was driven partly by the rally in shares of Macau casino stocks, which jumped after the semi-autonomous territory's government eased quarantine requirements for visitors from mainland China. First, Apple and now Tesla, the electric car maker, announced a 5-for-1 split for its common stock as it tries to make ownership more accessible to employees as well as investors. It will come in the form of stock dividend for each holder of record on August 21st. Trading will then begin on split adjusted basis on the 31st of August. Apple had earlier announced a 4:1 split last month, and then after the shares had soared, Tesla gained more than 8% to as much as $14.90 in late trading. Airbnb is prepping to go public. The home sharing platform plans to file IPO paper with SEC later this month. Morgan Stanley was tapped to lead the offer, and Goldman Sachs is also playing a key role. The CEO Brian Chesky said in June that the company's recovery from the pandemic-induced travel slump had been so swift that going public was still on the table. The company had a valuation of about $18 billion as recently as April, so it remains to be seen how it is going to be priced. Earnings that we'll be looking forward to would be Tencent, Cathay Pacific, as well as Cisco. That will be coming out later today. It's been the junkiest August ever. A rush for new deals on Tuesday has the junk bond market poised to set a record for August issuances, with volumes expected to top 28 billion, a record from August 2012. With about 8 billion of deals in the pipeline, the market may surpass all of 2019 issuances this week. So we have seen a lot of action in both the IG and high yield space, but the pace has been really breathtaking. On the FX side, dollar was actually mixed against most of the major currencies, but the dollar lost a lot of its value in the Asian and the European hours. During New York session, the dollar bulls were pretty much in control. Stronger than expected producer prices helped, along with an uptick in Redbook retail sales. All this leading up to Friday's consumer spending report. Euro continues to be one of the strongest currencies despite signs of a double top, and it struggled to close above 1.18. The pair still managed to outperform most of its peers. The expectations component of the German ZEW survey rose to the highest level in 2003. What does it mean? Investors are less confident about the current conditions but very optimistic about where the economy is headed, which is a testament to the local government and EU's efforts of containing the virus. The focus will shift to New Zealand today with the Reserve Bank's monetary policy announcement, which is on the calendar. Not expecting a major change in any of the policy statements, but their view on the economy and how they see it play out over the next couple of quarters will be interesting to note. That's the update. Stay safe and healthy, everyone.